Live from New York, I'm Alex Steele with Guy Johnson over in London. This is Bloomberg Market. So lots of earnings coming out today. AutoNation, one of them, posting a record profit in the third quarter, beating analyst estimates on both adjusted earnings and revenue. Joining us now with more is Bloomberg's Scarlett Fu. Hey, Scar.
Hey, Alex. Well, AutoNation's results really show how good the pandemic has been for car sellers, because you've got demand from people who would rather drive than take public transportation, and also demand from people who would rather drive than fly, for instance, on vacation. And of course, people are leaving the cities in droves and moving to the suburbs, and everyone needs at least one car there. AutoNation stock rising as much as 10% today, touching a record high, and as you can see there, outperforming car manufacturers like GM and Ford since the recovery, whose factories we know ground to a halt for about 2 months and are spending an awful lot of time and money on electric vehicles. Now, half of the 10 analysts tracked by Bloomberg raised their third quarter profit estimates on AutoNation in the 4 weeks leading up to today's report. As you mentioned, both the top and bottom line beat estimates. Revenue down about 1% from last year. Adjusted EPS was almost double from the same time last year. Cost cutting helped improve profitability. Gross margin per vehicle steadily rising over the third quarter. There's also a shift toward the used car segment. Bloomberg Intelligence's Kevin Tynan says this was actually already taking place before the pandemic, but it's now really starting to pay off, and this is a clear growth catalyst. AutoNation's used car revenue rose 7% year on year, while new vehicle revenue rose, actually, I should say fell 4%. There we go, with the supply of new cars still constrained. So when you look at used car prices, here's where it gets interesting. They fell from April to July, but then they began recovering, and you can see they really took off in September, surging 10%. Lean inventories and cheap financing are a powerful combination, giving sellers like AutoNation pricing power. Guy?
Scott, thank you very much indeed. Let's carry on the conversation. Joining us now to do just that is Mike Jackson. He is the AutoNation chairman and CEO. Mike, strong numbers. I want to pick up where Scarlett left off. Used cars, the prices have risen and risen sharply. How sustainable is that?
Yeah, I think of everything that was said there in the opening. The most significant and important is that coming out of shelter in place in America, there's been a significant shift and demand for personal mobility. And I think this is a resurgence of America's love affair with the automobile and the security, freedom, the ability to go where they want, when they want, how they went, with who they want, and a movement away from shared mobility. And this has created significant demand across the entire spectrum from pre-owned to new. Now, on new, we have significant shortages due to the plant closings from 8 to 12 weeks, depending on the manufacturer. And as they gradually restart, though, there is a significant shortage of new vehicles. I think for the industry, inventory levels are down 25–30% from a year ago, almost 1 million units. So customers coming in that maybe would have bought new, they really want something, though, for personal mobility. So we present pre-owned to them, and they make that choice. So this combination of overall demand, shortages on new, have increased even greater demand for pre-owned. And so since we have a supply constriction, we've balanced pricing to make up for the volume shortages, and it combined that with the cost control, and we had the best quarter ever.
So, Mike, question, how long do you think the supply issues are going to last for? I mean, is it like a get a vaccine in the arm, everything's back to normal? Give me some perspective on that.
So, first, I think the shift on the demand is longer term, and will still be there going forward. The supply issue has been difficult and has taken longer than what the manufacturers originally told us. We thought we'd have improvement in the third quarter. It didn't happen. Doesn't look like it's going to happen in the fourth quarter. So I think we're into next year, first quarter, second quarter of next year. And you have to understand, for the manufacturers, they had to introduce social distancing into the plants. They have to test constantly. If they have a situation, they have to do what's appropriate. And this is a whole supply chain that can be disrupted. Plus, there's transportation issues. So it is taking longer on the supply side. So I think it's into the first quarter, second quarter next year before the supply is readily available.
Mike, when that happens, Does it just ripple straight into the used car market? Do people buy a new car rather than a used car? I ask the question because at the moment, used car inflation is one of the biggest components of a drive higher in US inflation that we're seeing at the moment.
Yeah, it's very difficult to predict exactly how it's going to unfold. But the principles that are there is there's higher retail demand for automobiles in principle, and I should absolutely state that that is underpinned with extraordinarily low interest rates, that all the evidence will be available for our consumers for years to come. So we have higher demand with very affordable financing, and it's a very powerful combination. Now, exactly how it gets rebalanced as inventories improve on the new vehicle side is very difficult to predict. But automotive retail will do well next year. That's for sure. And we'll manage the transition.
So, Mike, something that's also happening will be a presidential election. And clearly, if we get a President Biden, that would be a huge sea change in alternative energy, potentially for EV adoption. Mary Nichols, who really runs policy in California for EVs, is sort of rumored to maybe have his EPA, et cetera. How do you think that market can develop if we change presidents?
Well, regardless of who's president, the industry's embracing of electrification has already happened. We're past that. The manufacturers are investing over $200 billion of capital in the transition from an internal combustion engine into electrification. That commitment is there, it's made, and we have very exciting electric vehicles that AutoNation is going to be selling already today and in the future. And all you have to do is look at last night's announcement of the GMC Hummer. Oh my God, I was watching that and it put a smile on my face, because this moment epitomizes, it's a metaphor for the transformation of General Motors in one vehicle. Imagine the Hummer had to be shut down years ago as being completely out of favor, and they completely reinvented as a pure electric vehicle that is so fun, so exciting, so spectacular. It's really just wonderful to see. And we're going to be selling those Hummers as a retailer, and we have the Porsche Taycan, and the list goes on and on. So electrification is here regardless of who's president.
Mike, are you a beneficiary of the stimulus checks that have been going out?
So as far as the consumer's financial health, if that's what you're trying to get to, here's the most important insight I can give you. So the consumer is okay. They're paying their bills on their car loans. But what has happened is there's a different prioritization within where the household budget is going. And so you have a bifurcation where there's winners and those who are not doing so well with this bifurcation. And here it is. I can sum it up for you. There is a migration away from density as far as where they're going to live, and they're willing to buy homes, and again, interest rates are supporting that give them more space, and it sort of embraces this concept that they're going to be spending more time at home and working more from home. And they want a more pleasant environment, so home improvement has got to be doing well. And then second, they want to define their own mobility. We have customers every day that say, you know, on my next vacation, I'm driving. And so there's been a prioritization for personal space in the budget, of which we are clearly a beneficiary. So then on the other side of the coin, there's other segments that are really struggling, and that's you know it very well, travel and others. So we are a beneficiary of this shift. And by the way, I think this is a real shift in mindset. Shelter in place was a shock to the American people and American consumer.
Yeah.
It was something unimaginable for a very independent people that has made an impression on their mindset, and they have really rethought how they want to live. They don't want to be in that predicament again. And so we see this shift that overall, with that reprioritization, I'm very confident, optimistic on auto retail.
Mike, we always love catching up with you to get the real deal of the market there. Mike Jackson, AutoNation CEO, thank you very much. This is Bloomberg.